The events that have happened over the last 24 hours has led to the failure of Silicon Valley Bank, the backbone of the tech industry, especially here in the San Francisco Bay Area. It has been shut down by regulators. Now the FDIC takes over and says that insured depositors will have access to their deposits no later than Monday morning. Of course, that only covers $250,000 worth of deposits. Many that I'm speaking to had a lot more in their accounts at SVB. Put simply, this is what happened. A perfect storm, or a trifecta, if you will, of events that led to the failure of Silicon Valley Bank. One, rising interest rates, which we have talked a lot about. Two, falling venture capital investment levels. We know that money has dried up in the current environment. Three, sustained startup cash burn. The CEO, Greg Becker of SVB, has talked about this in the past. He expected this cash burn level to get better. It has not. This has led them to this position. And in the last 24 hours, many founders, investors that I've talked to have been desperately trying to get their money out. Some were successful and some were not. In fact, I think we have video of the scene right now at one of the SVB offices in New York. You can see that a few founders had collected and they were trying to get their money out. They were turned away. Other founders that I've talked to tried to go to actual bank branches and get cashier's checks so that they could walk to another bank and deposit those. A lot of fallout is still being figured out right now in the Bay Area. A lot of the people I'm talking to are trying to figure out what is next. I talked to one founder, Scott, who says that he was just about to wire money to his new SVB account. He's thankful that he didn't, but now he doesn't know what's going to happen because it takes time to open another business account. And the startup environment, by the way, is getting all the more tenuous because of this failure.
Hey everyone, welcome back to our channel. If you're new here, please subscribe. I'd really love that. If you're returning, how you doing? What we're going to be talking about today is what's going on in the financial market with all of the banks. And yeah, I waited a few days before I talked about this because I wanted to get everything straight and do my research. You know, 3 years ago when I first started this channel, and I introduced you to my best friend Trish, who works for Goldman Sachs. She's an international banker. We, both her and I, both went on and did this whole thing with doing a lot of lives and things like that, talking about CBDC and UBI, you know, and a whole bunch of things. And Trish, she tried to warn everyone about what was coming in the next few years. And this is one of the things that she tried to warn everybody about, okay? About that we were going to have a crash that was much worse than 2008. And son of a gun, here we are, all right? And you know, it's very hard for me and Trish to get together to do a live because both of our schedules are so conflicting all the time. So I'm going to give you the research that I have found, my feelings on everything, even some videos that I have found, screenshots that I have found. I'm going to give you everything that I have found, okay? And first, I'm going to start off with an email from a community member. And she said, very few of us have insider information relative to the stability of the bank where our money is stored. However, you can be proactive. She said, Google your bank name, stock price, and your bank name stock price history to see what's happened in the past few weeks. For example, Wells Fargo stock price. Before SVB tanked, their stock dropped over 60%. I believe that was on Thursday. Then on Friday, the stock tanked and the feds stepped in. Set an alarm to remind yourself to check the stock price for your bank. If it starts to go south, get to the bank fast. She's right. Now, a lot of you will say, well, I'm with the credit union. Cool. But the credit union is not backed by the FDIC. Okay? But most of you know that if you're with the credit union. But if you bank with the credit union, 9 times out of 10, your mortgage is not with the credit union, right? So you're like me. You bank with a credit union, but your mortgage is with Wells Fargo or Truist, or it used to be SunTrust before they went belly up and they were bought out by BB&T, okay? Or BOFA, Bank of America, or whatever, okay? So what's going to happen now with Wells Fargo, okay? Because they're on the list. They've been in trouble for decades. For what? Fraud. I mean, everything you could possibly think of that a bank could possibly get into trouble with, they're there, okay? So what's going to happen now with my mortgage, your mortgage, whoever has a mortgage with Wells Fargo, even if you don't have a checking account, savings account, with whatever, your business account with Wells Fargo? What's going to happen with our mortgages? Are we safe? I'm not quite sure. Have you received anything in the mail yet? Me either. My best guess, my best educational guess, is that if and when Wells Fargo goes belly up, our mortgages will be bought by the highest bidder, possibly the lowest bidder, not sure, but most likely the highest bidder. And then we will start to get mail or whatever by the newest mortgage holder and say, okay, well, we now own the mortgage on your home and this is going to be the next step, but you know, keep paying your mortgage and blah, blah, blah. So, but she's right. Check the stock on your bank and then get to the bank because and withdraw out. Okay, but always keep in mind though, always keep this in mind, keep at least a month's worth of your bills in the bank if you have like automatic withdrawal or whatever the case may be, because you don't want to scar yourself when it comes to your automatic withdrawals, whether it's with your mortgage, your electric bill, your water bill, your internet bill, your cable bill, your cell phone bill, your car insurance bill, your car payment, whatever the case may be. You don't want to cut your nose to spite your face. Okay, whatever extra you have in there, get it out. Okay, is there going to be bank runs? Oh my God, yes. Okay, yes, there is going to be bank runs. Is the bank going to have enough money in there? Nope. Okay, but these are things that you're going to have to keep in mind. But these are things that I have been talking about and Trish has been talking about for years. And we've tried to prepare you for what was coming because we knew that this was going to happen. Okay, and so we tried to prepare you. And in speaking with a lot of community members over the past 3 years, and with Trish and I both helping a lot of community members out, with their finances. And I mean, not just with people who live in the U.S. We've been helping out people who live in other countries as well. And, getting them, on a financial path that is right for them and, things like that. So, and these are the things that Trish and I both do. So, her more so than me, but I help people get on budgets, things like that. Okay. So, this is something that you're going to have your eyes open. Okay. Because you are not going to believe what's going to happen next. Okay. And you're going to see it. And for those who don't, shame on you. Shame on you. Okay. So, but please believe me when I say it, leave at least 1 month in there for your automatic withdrawals for your bills that you have automatic withdrawals on. Okay.
One of the biggest banks in America just collapsed. Silicon Valley Bank, which was like the 15th largest bank in America, collapsed after a bank run. I'm not gonna lie to you, I never expected a bank run to actually take down a bank in 2023. But it actually happened all within 48 hours. The FDIC is now taking control of the bank as of today and try to sort out all this mess because there's a lot to sort out. I'm gonna make a separate video on how the bank actually collapsed and what happened, but let's talk about what's gonna happen next. The FDIC is officially taking over as of today. And in their press release, they said that any account that had up to $250,000 are gonna have access to their deposits no later than Monday morning. But if you had more than $250,000, then it might take some time for you to get access to your money, because the FDIC has to sell the assets of Silicon Valley Bank in order to get the cash to give back to the depositors. What's interesting about Silicon Valley Bank is most of their customers are tech startups. As you can imagine, most startup companies probably have more than $250,000 in their business bank account. And if they don't get access to that money right away, then they might not be able to run their day-to-day operations or even make payroll. So the failure of this bank could have a huge ripple effect that we're just starting to figure out. I mean, this is the second largest bank collapse in US history, so this is a pretty big deal. And now people are worried if this is gonna lead to more bank failures. I don't think that's the case, but I can definitely see why people are concerned. The story is obviously still developing. I'm sure we're gonna learn a lot more in the next few hours, the next few days, and yeah, the ripple effects of this stuff is going to be crazy. I'm going to try to do my best to make sense of all this stuff. I'm also going to make a separate video to explain how the bank run happened and how it happened so quickly. It seems to be pretty self-inflicted. So if you are interested to learn more about that stuff, be sure to hit that follow button.
Okay, so this picture that I'm going to put up for you was actually sent to me by my husband, okay, because he is like me. He keeps up on all this stuff too, okay? And he was just telling me that the bank, the SVB bank in New York, they actually had to call in NYPD because of the bank runs. Okay, so this is how serious this is going to get, okay? It's going to get to the point, because the banks are actually, they don't have as much money in the physical bank as you might think, okay? So this is a picture that my husband sent me, okay? And it gives you, on the left side, okay, it gives you a list of the banks, okay? SVB, FRC, which is First Republic Bank, Western Alliance Bank, Signature Bank, Zion, East West Bank Corp. Okay, it gives you all the lists of the banks, okay? And then the next column, it's the weekly perf, P-E-R-F, okay? Performance, okay? And then the next column is the change percentage. And then the next column is the year-to-date performance, okay? Then the next column is the yearly performance. And then the next column is the volatility, okay? And when you go down and you look, it's all negative, all in the red, all of it, okay? And when I was talking about Wells Fargo, all in the red. And the other one, okay, remember I was talking about SunTrust that got bought out by BB&T, okay? And they are now called Truist. Guess what? They're also a part of it. All in the red. So if you bank with them and you have your mortgage through them, guess what? Okay, so this is what I mean. Oh, Regions, that the other bank, Regions, all in the red. Okay, Huntington Bank. Okay, Citizens Bank, Fifth Third Bank. Okay, these are some of the big banks here, man. Okay, so this is not something that you guys should be like, oh, it's all right, it's not going to really affect me. Yes, it is. All right, so here's that picture. Okay, so pause the video. Okay, and just look at it and see if your bank's on there. All right, look at the numbers. Okay, so now here's just a quick rundown, okay, of the bullshit. All right, so the FDIC, they said in an announcement that the insured depositors, us, all right, will have access to their deposits no later than Monday morning. Now, SVB, okay, Sam Victor Bravo, I'll just say it like that, their branch offices will also remain open at the same time under the control of the regulator. Now, the FDIC standard insurance covers up to $250,000 per depositor per bank for each account ownership category. Now, this is considered what is called Black Week for the American financial system. In just 48 hours, the banking sector has been shaken by the collapse of two major banks. All right. So, most worrying is that these banks served two so-called growth economic sectors, the tech sector and the cryptocurrency industry. All right. Now, we have, okay, for all those that are in with these banks that are listed, okay, you have no later until Monday morning of March 13th, 2023. Okay, so this Monday, get your behinds to the bank and get it out. Right on? Now, the FDIC will pay uninsured depositors an advanced dividend within the next week. Might as well put your hand on your ass and wait. Okay? Now, uninsured depositors will receive a receivership certificate. So like a rain check. Remember from the 80s when Kmart didn't have what was on the shelf? You got a rain check, right? For the remaining amount of their uninsured funds. All right? Now, also, take into consideration, you will now start to also see more of CBDC and UBI. Told you this was coming, did I not? All right, so the U.S. banking system is on the verge of a much bigger collapse than 2008. So banks own long-term paper at extremely low rates. They cannot compete with short-term treasuries. Mass withdrawals from depositors seeking higher yields will result in a wave of bank failures. That is it. That is all. This is what we are, okay? I hope you're ready. I hope you got your home in order. I hope you got your preps in order, because this is it. SHTF is here, y'all. Okay? In the banking financial world anyways. All right, I'm out of here. All right, I'll see you in the next one. You stay safe, you stay positive, you keep prepping, and as always, fearless.